Hello, it's Brian Shannon from Alpha Trends Blogspot. Today is Monday, the 23rd of July, and the market has closed. So let's take a look, and you can see that today on the S&P 500 we have what's known as an inside day, meaning today's low was higher than Friday's low, and today's high was lower than Friday's low high. So today's trading occurred within the range of Friday in its entirety. So basically, not much happened. You can see that the market closed just about where it opened. S&P did gain 61 cents, or about 0.4%. And we saw a test of the 20-day moving average on Friday. That came with heavy volume, and I still think we've got to be a little bit cautious in here. We still have this inverted head and shoulders pattern that I had been pointing out. And really, I think it's going to take a break below 152 before we really start to get, before I think I'd really become negative on this market. But I am concerned because we have a declining 5-day moving average, and that usually indicates further weakness on the intermediate term time frame. But again, we do have a 50-day moving average that's rising. So we've kind of got mixed signals here. And when we have mixed signals like that, it means we have to go slow and be careful. We've had some really mixed results from earnings. Some companies are up huge. Look at ISRG. Let's just take a look at that one. That one on Friday had a massive day, while Google was the one that got all the attention for being down, and that continues to be lower here a little bit today. So back to the S&P 500, we are still in the thick of earnings season, so there's going to be a lot of individual stock movement regardless of what the overall markets do. But I think generally you want to be pretty careful in here with this declining 5-day moving average. And even a break below this morning's lows, 153.85, I think does bring about that test of 153. And below 153, then I think you've got to start looking at this as maybe this trend line it would be taken out in there. But we should find some support, hopefully, down near that 153 level. But if that fails to hold, then I think you test the 152, and that's all about as far as I'll take it for now. Looking at the IWM, this one failed pretty hard on Friday. Friday we had a gap lower, and then it came down. I was really looking at getting more defensive on Friday below 84.50, and I think you've got to continue to be defensive, particularly with this declining 5-day moving average. In fact, you might, as a short-term trader, there might be better opportunities on the short side in the IWM. But that 84.50, 84.25 level broke pretty hard on Friday, and daily time frame, we're looking at this trend line here is in jeopardy of being taken out. I don't think that's going to ruin the market itself. I still believe that 81.50 is the more important level. Perhaps we're going to go down and test the low end of that range. But this market does give me a little bit more concern because it's tested that resistance so many times, and it should have broken out based on, the more times the resistance is tested, the more likely it is to break out because that supply in that area should be worked through. But there seem to be persistent sellers up there, and they have once again taken control of the market in the short term, short to intermediate term time frame, and that means we've got to be very careful in here. The IWM breaking below 83 and staying below 83 for more than probably a half hour or so, I think would potentially lead to a move down towards 82 initially, and then a test of that 81.50 level. The semiconductors, SMH, these guys lost 8 cents today. Still in a very healthy uptrend on the daily time frame, but wouldn't be surprised to see it pull back down towards that 20-day moving average. And as I was saying last week, we might even get a move all the way down towards about 38.50 or so, that prior level of resistance. So looking at that 30-minute time frame, you can see that this uptrend line was kind of broken right there at the end of the day. We've got this little pattern of lower highs and lower lows. So below 39.80 and staying below that level for more than probably, again, a half hour or so, I think we're going to see a test of that 39, then down towards 38.50 or so. So right now, short-term trend in the semiconductors, it's looking pretty ominous to me. So breaking, let's just call it 38.70 just to give it a little bit of room in there. But breaking below 38.70 and staying below there for more than about a half hour or so, I think there could be some further profit taking in the semiconductors. This market gap down, it's now got some resistance up near 40.5. So we've still got to be careful in there. As for the Nasdaq 100, the Qs were up 2 cents today, and that's a 0.04% rally. This was the trend line that I had outlined this morning. This isn't the trend line I had outlined this morning. The trend line was right here that I had outlined this morning. And you can see this is going back about 20 days or so. The trend line I just had on a 10-minute time frame was broken. But the more important trend line backs us up about 20 days or so. And you can see what's looking like potentially a head and shoulders top formation in here. First sign of that would be trouble would be breaking that trend line. That's at about $50 a share. So breaking below there, I think we then get a test of this 49.60 level, and below 49.60, 49.65, that's where we could potentially look for that measured move to play out from 49.60 up to about 50.60. So that could bring us down to about 48.60 or so based on the measured move. And I think it's just time to be a little bit more cautious in here, because this market is pretty extended. It's been pretty easy on the longs here the last few weeks, and a little bit of profit taking is all this would really be for now. But that's just one potential scenario. We've got to be aware of what it means a break below 49.60, and that is that this trend could be broken and the possibility of just a little bit further pullback. And that's all it is again, a pullback within an uptrend. Overall, the Nasdaq remains in a great uptrend. There's no reason to doubt it. There's no reason to think that this is the top of tops. A lot of people look for that, but a little bit of a short-term correction wouldn't come as a surprise at all. This isn't a prediction. It's only a possibility of what might happen. This 5 days moving average is flattened out, and basically it could go either way. Getting back above 50.30, I think that maybe even 50.40 is probably the better level. Back above $50.40, then we want to start to get a little bit more bullish. But right now it's kind of in no man's land, so just go slow.